This is Craig Howgard with your Financial Issues Ag Update. Well, corn pushed higher once again on Friday as it was driven by strong demand. We had the announcement of another sale of 100,000 metric tons to an unknown destination. And the market also still seems to be buzzing with rumors that China is going to end up buying several million metric tons more than they have already booked. Well, the demand side of the story is strong. The supply side has some interesting wrinkles as well. Snow and rain across the northern belt will slow down the final harvest push, and that kept basis levels firm as the pipelines need to attract bushels. We're also seeing a sign of strength in the narrowing of the nearby corn futures month spreads, which signals that the market wants those bushels right now. The end result of all of this was that corn futures closed higher every day last week. Soybeans have been driven higher by great demand and South American weather concerns. Last week saw good export demand continue with a total of 15.3 million bushels in new sales announcements during the week. Total soybean sales commitments now have reached 1.696 billion bushels. That's 77% of the USDA's total export forecast. It's the fastest selling pace we've had for soybeans in 20 years. In South America, the weather is improving in the near term, although the long-term forecasts are not as optimistic. Traders are keeping a close eye on planting progress. A crop that is planted in a timely manner in South America will result in less unplanted acres and have their crop ready in time to cover China's switchover in soybean suppliers from the U.S. to Brazil and Argentina. This could make a difference between a rationed U.S. carryout if Brazil and Argentina is not ready, which would push our carryout below 100 million bushels, and a 300 million bushel carryout if they are ready, which would probably result in futures trading anywhere from 40 to 50 cents lower than the current price levels. South American weather is going to be key to this market in the coming days. Wheat prices traded higher Friday on crop worries, plentiful global demand, and ongoing dryness in the Black Sea region, Argentina, and the U.S. Southern Plains. The winter wheat belt in Russia is averaging 2 inches below normal rainfall for the past month to date, and Friday saw Russian wheat values rise once again, with the Black Sea wheat futures now trading $9 per metric ton higher for the week. Cotton futures have had a good run lately, but Friday saw them losing some ground. December futures closed 65 points lower as they settled at 71.29. Livestock futures found a little redemption after Thursday's tough session. December live cattle futures ended the session 10 cents higher, while November feeder cattle were 77.5 cents higher at the close. After the close on Friday, we had the monthly cattle on feed report. It showed that as of October 1st, cattle on feed were 104% of last year. September placements came in at 106% of last year. Now, analysts expected placements to be 2.4% higher than year-ago numbers. This was the third consecutive month that placements have exceeded estimates. September marketings were also 106% of year-ago numbers. After being limited down on Thursday, the December live hog futures posted a higher close as they finished up 82.5 cents. Class 3 milk futures turned in another amazing performance to end the week. At the close, November futures had set yet another life of contract high as they finished 75 points higher, closing at 22.19. Meat cutout values, on the other hand, struggled. Choice box beef were $1.37 lower, closing at $207.49. Select boxes were 32 cents higher as they ended at $191.40. And pork carcass cutout values got hit especially hard as they closed down $5.59, ending the week at $93.25 per hundredweight. This has been Craig Howgard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.